It's that time again. Time for this week's Lucia Capital Group weekly video, and I'm Rick Plum. So the new year is upon us, and even though many people are still reconciling their bills from Christmas, right now is the time of year that you need to start thinking about income taxes. This year, though, may wind up being a little bit trickier than normal, mainly due to the huge jump in unemployment that we saw in 2020, as well as working from home and all other corona-related problems that we saw. Here are a few pandemic-related conditions, both good and bad, that you may need to consider. Unemployment. Let's start with that. The benefits that you receive are taxable to you as ordinary income, and this catches a lot of people by surprise. If you did get unemployment benefits, you weren't required to have federal taxes withheld, and in fact, most people opt not to, probably for obvious reasons. They need as much money as they can. But if you don't account for them on your tax return, you may wind up owing back taxes, penalties, and interest charged by the IRS. You should know as well that unemployment benefits are all subject to federal income taxes. Not every state will tax them. So depending on where you live, you could get a break there. On the upside, a drop in income from a job loss may make you eligible for deductions or credits that you normally wouldn't get, like the Earned Income Tax Credit or Child and Dependent Care Tax Credit. Be sure to double check to make sure that you're not missing out. Stimulus checks. The CARES Act, passed early last year, gave millions of Americans a $1,200 benefit per adult and $500 per child. These benefits are not taxable. What you may not know is that this money was actually an advance payment to you on a recovery rebate credit for the 2020 tax filer. So if you were eligible, but you did not get the payment, or only got a partial payment, you can resolve this issue when you file your 2020 tax returns between now and April. If you were somehow overpaid, you still will not owe that money back. And remember this, if you did not get a relief check because your prior income was too high, but then it fell in 2020 and that made you eligible, you can get this payment by taking this credit. Now, working from home. The new normal for many people in 2020 was working from home. And that may have you wondering if you can take any expense deduction for a home office. Short answer, maybe, but probably not. The deduction for a home office is reserved for businesses or for those who are genuinely self-employed. And even if you're in that category, keep in mind that your home office must be used exclusively and regularly as your principal place of business. So if you consider your kitchen to be your new home office, but you also use it as your actual kitchen, well, that's not going to fly. Now, what if you moved? If you relocated or moved to another state during the pandemic, you may need to file part-time taxes in multiple states. Make sure you know your new state's tax laws to avoid real hassles and headaches later on. And by the way, if you're hoping to lower your taxes by claiming residence in the state with a lower tax rate, be very careful. Residency requirements at both the state and federal levels are strict, and many states have gotten very aggressive about going after those who say they're no longer residents. And in case you didn't know it, unless you're in the service, moving expenses are no longer deductible. These are just a few of the issues to look out for when you start putting your tax information together for your 2020 tax return. Tax management is something we do every single day here at Lucia Capital Group, so if you need help sorting out what's new for this tax filing season, just give us a call. We're here to help.